Well, today we're going to probably lead our session in Russian primarily because we only have one panelist here today who speaks English.
Manu, is it okay with you? So what is translation? Is it fine? Okay.
So, today we're going to have a somewhat unusual session because we try to dilute people of various investment banks with one of the vendors who is quite proactive in reaching out to this market. And this is probably going to be quite interesting to listen to the opinions of our panelists today from different angles, I would say. And the question that we put for discussion today would be something that we are going to discuss, really. We don't have much time to do that, so we'll start from the crux of the matter. And what do you see as crucial changes in the last year? Perhaps we can start with the clients. The clients are probably the most important players in the market. You can really trade nicely between yourselves and have good positions, but the flow of the market would be really focused on the client. Maybe, Andrey, you can open up. What do you see in this market? And then Anton and Evgeny, you will be next. Thank you, Sergey. Indeed, I'm happy to be present here. When I was really here, I was thinking about really switching on my camera. Because when I was thinking maybe we're going to do this online, then probably you should have it camera running, because now we have this missing feeling of the offline meeting. Now, we do see the turnover, the client turnover growing. We do see corporate and retail turnovers growing, and banks are trading more actively, and this is the consequence of the growing market, of course. And the second thing is that banks are investing more and more in technologies. They're finding more and more benefit in the analysis, market analytics, and machine learning. What is also interesting is that regarding clients, that clients are more demanding. They are not satisfied with just some pricing, narrow pricing. We only provided some spots and narrow pricing, and that was something that was required by our clients. Now, today, clients want full-fledged post-trading, good client path, a good API, and various instruments that would fit his or her requirements. Second, funny as it may seem, the clients really go away from trading. The thing is that basically this entry point or entry level to hire a trader and to have the full trading system in place, that entry level is much higher. And then what I mean to say by the clients abandon trading is that they are actually preferring integration. Corporate clients and financial companies are now coming to, say, Sberbank, and they're saying, okay, here's my risk, and this is the challenge that I face. And we have sales and operators and developers who can provide a solution. This might be a structural or operational solution, but that would fit the needs of the client. And third, why is this happening at all? The markets are more transparent today, and I would say maybe more fair. And this is the consequence and the impact of the FX Global Code. And everyone would be introducing data analysis tools, and clients are starting to count their money. Strange as it may seem, clients in the past had no way to count their money. Now they do, and they do see some essence and sense in this integration, and this is what the future holds, integration. Anton, what do you think? Well, colleagues, good morning. Indeed, overall, as we heard, clients do really focus on electronic solutions, and this is what we see. But we also see that more and more clients are using aggregators There are more and more such aggregating services in the market today. Now, you would think that this is quite transparent and nice, but on the other hand, the share of the sharp flow is not really toxic, but it is still growing from the clients. And this is the consequence of the fact that the clients simply do not know how to properly execute their orders in full amount or not full amount. Or maybe this is driven by the functionality that is not really promoted by the aggregators, or maybe some hedge logic of those aggregators is so that when a client executes through aggregators and sees many providers, but then after taking some size of the market would be working against the liquidity provider. So if it was to be internalized, then everyone would be losing, the clients and the liquidity provider as well. This is not always the story, but the size of this story is really growing. So I believe that this is a challenge that every desk would be facing. So the question is about the way you communicate to your clients. How do you discuss? Do you discuss every deal, or do you discuss it weekly? So how really prompt that mechanism would be? How do you really understand whether this is a toxic flow or not? As our colleagues, we do pay a lot of attention, maybe even more attention, to data analysis and the way the market would be behaving after a deal. So we are looking at the outcomes, and we do share reports with the client, and based on such data, based on numbers, we can demonstrate how the execution really looked like. And finally, what was the price paid by the client if you take the average market movements and price. We do have some flow amounts that we trade with the client, and if the clients really thought that the more liquidity providers you have, the better. Actually, it is the worse, because you really need to understand how every next liquidity provider would be hedging you and how the market would be changing. So it's an important point. So we do share the data. We have regular analytics, and this is something that we can offer to our clients at their request. And this is quite positive. Also, in terms of our corporate clients, we really are not sitting on our hands, and our platform, FX Online, offers the code, forwards and swaps, and DCD we also launched quite recently, and clients are actively using that. So this is a good thing, really. And in terms of our range of services, we are also growing. And one of the important points there is that some of the FIs probably do not have SWIFT. So, or if those are like small institutions, but if you take non-banks, they don't have any SWIFT opportunity. So we actually are now offering that without any SWIFT vehicles. We do see a growing interest in such a service being provided. And one last point about internalizing the operations and results. I talked about auto hedging. It is not always bad. Sometimes it is also good. If a client really understands how those transactions would have really be having an impact on the market, and if they talk to the liquidity providers and the liquidity providers have all the reports, then the clients would be trading in full amount. If you do want to internalize as much as possible, but then you need to really understand how you are going to explore your positions. And this is quite a resource-intensive process, how to really set right your liquidity providers and the hedging processes with them. And we do have a full team really looking into that. We're going to discuss this more, but maybe we can have a few comments from Evgeny. Evgeny, you worked previously as a prop trader and you did not service your clients, but now you have a different position perhaps. What do you think? Are clients important to you? Thank you, and good morning to you. Indeed, I learned a lot during this past year, and I also kind of like explored new things. Just briefly about what I think the client's behavior would be and how I would be behaving if I were in the shoes of the clients. I was not really a client before, a client-oriented one. I was doing the prop trading. The service and the highest quality of this service, and the service that probably was not really requested by the client, but it was offered. I think that that service is available universally, and that's a given. Now, the clients want to behave themselves in the market in a way to make money. And of course, in this very difficult market, they want to make money, but this is a difficult challenge, and they are testing new things like breaking up their orders and changing their positions. But the pandemic probably was a helping hand there in terms of innovations and trying to make money and is not really easy. If I were on the client side, whether corporate or retail, I would not have tried to do that. I would rather be using such tools as execution, would it be CP or fixing, etc. Again, much of that is still available for free. So if I were the client, this is the way I would have been behaving in the market, not trying to really get a very high margin. But the clients actually were trying to do that in the past, and they will be trying to do that in future. And thank you. Now, coming to the questions that were raised by our banks, I would like to ask Manu, who is from DMALINK and who is the CEO of DMALINK. Maybe, Manu, you can share a few words about your company, about your solutions, and what did you hear here during the panel about the points of pain, I would say, that were shared by our colleagues. How are you going to really meet those pains and challenges in terms of internalization and hedging, and what your company can offer, and what is your view of the current situation? Thank you.
Yeah, thanks, guys. Sorry, I want to apologize first and foremost for being this casual, but unfortunately British Airways stole my clothes and my baggage, which are in London, and I may see them again at some point. But when I'm not chasing items of clothing and suits, I'm the CEO of DMALINK. We are a EM-focused, data-centric ECN. I'm also the co-founder of Dfinity Digital Assets, which is a digital ECN. Both platforms are institutional only, so we deal with banks and funds principally. In terms of the question of client behaviors, again, this is a trend we've been seeing for quite a few years, but certainly in the last 18 months, it's accelerated, and that is the use of algos. And we've seen some great innovation with these risk management algos, with the incorporation of transaction cost analysis, with the ability to tweak these during the execution, i.e. in flight. And we think this innovation is going to continue. In terms of topics clients are asking us a lot about, I've got to be honest, 12 months ago, no one cared about crypto and no one asked me any questions. Today, every single person I speak to wants to know about digital assets, wants to know my view on Bitcoin, wants to know my view on decentralized finance, wants to understand when smart contracts will replace venues like ours, which is not a question I like answering, obviously. And I think this is very telling of the times. I think also the other development that that the panelists alluded to was artificial intelligence. This is going to be huge, and I just want to be clear in terms of where I see this. This is not about replacing people. This is about giving every single portfolio manager, every single execution trader, superhuman abilities to read the insane amount of data that we have and make better informed decisions with that data.
Thank you. And so you are ECN. So when did it started? And can you share with us any numbers, volumes? So how much do you trade? And
yeah, sure. So in terms of actually, sorry, I didn't finish the first point. Sorry, but in terms of our view, we are EM focused. We are here because we want to do more ruble business. We understand one of the pinch points clearly is credit. And thankfully, we've got the blessing of the support of NatWest Markets, who are our central counterparty, and they are very keen to help facilitate more business with Russian entities via NatWest Markets. So again, that is something we're aware of. We want to do more business. We want to do more trades in terms of trading volumes. I mean, look, our trading volumes in ruble are not huge. We're probably talking about $2 billion worth of ruble trading we do over the course of a month, which is nothing. But that's kind of the purpose of coming here, to try and do more business and essentially raise the bar in terms of volume. And we're developing some pretty awesome products, which I'll talk about in due course, that will allow people that are executing through us free access essentially to better risk management tools, have access to better liquidity management run by artificial intelligence. And again, we're pioneering and we're developing smart algos.
Okay, thank you. Переходя к вопросу о том, что мы делаем более детально с order flow от клиентов и с анализом, да, понятно, что средства даже машинного обучения можно легко пытаться применять на больших объемах данных. На валютном рынке всегда есть с этим проблема. Да, все-таки, когда мы говорим о конкретных клиентах, данных на самом деле не так много, и как бы здесь, как вы считаете, насколько работают простые методы? То есть простые методы машинного обучения, которые в целом приспособлены для анализа большого количества транзакций. А вот насколько много такой ручной работы, либо же как бы вы считаете, что реально можно все автоматизировать, практически значит, вопрос оценки флоу от конкретного клиента можно поручить, так сказать, чисто алгоритму. Насколько каждый может сказать?
I wonder, in your desks, are you very much close to such fully automated processing, or is there still a lot of manual work there? On the team in the past, we had traders who were view traders, the manual traders, if you like. We no longer have those. If you're talking about trading, then everything is done by algorithms. About execution, indeed, there are people who really provide some manual support to execution. God forbid something happens without any backup, that might be a problem. However, in terms of the algorithm of execution of clients' orders, then indeed this is what we can offer in optimizing our clients in the market and minimizing the market impact and the costs, and working with our clients, trying to show to the client what happened in the market, so that that client can compare ourselves with other providers. Andrey, what do you think? Well, we do have a lot of data in Sberbank. We have an analytical lab, and we do have our data scientists, and we are using machine learning models both in pricing and in trading analysis, and also in hedging. So similar things to what Anton said. Importantly to understand is that if you would like to use this on the sell side in the bank, we followed the way that we are analyzing the models and testing those. But then for quite some time, those models are co-piloted. They are more like a recommendation for traders. So some of the instruments for market patterns, they would prompt the traders which of the settings to choose at a given point. And if they went through live testing, then such models can be inserted and integrated into the algorithms. Thank you. Just also briefly on all those points. Simple things have always been quite efficient, but it is not that easy to implement a simple thing. Sometimes it is very difficult to invent a simple thing to operate in the market. People and algorithms, both, I would say, and this is the way it is going to be in future, because people, for some time into the future, will still be operators, if you like, of those machine systems. Like take a nuclear power plant. You think that it operates almost by itself, but you cannot really leave it unattended without any human attention. In terms of machine learning and big data, this is all what we also have. But if you take our FX market, there are some challenges there. The ruble and other Russian assets are very fast for execution. FX and shares and bonds, just because the way our FX market is construed at Moscow Exchange, it is very fast. So if you go deep into using ML or big data analysis, you won't really catch up with those who are doing this in a simpler way, but faster. And that's why we have this little barrier of sorts to the implementation of those machine learning methods. I would agree of sorts there. Indeed, we would always have this question of balance between, on the one hand, of reliability and testing, and on the other hand, the fast-changing situation and the need to really react to that. Remember the totally different mode of operation of our markets because of the pandemic last year. Indeed, very few probably were prepared to that in terms of the mechanisms and algos. There was a question really, Evgeny, that you suggested that clients should really transact more in average weighted. But Andrey, what do you think? Is it really popular with your clients in terms of their execution of, say, taking the central bank rate for long fixings, and what do you think about the MOEX fixing execution? Well, I mean, that is one of the examples, really, how the clients are going away from trading. I would confirm the words of Evgeny that indeed it has always been difficult to trade, but when you are a corporate, to trade is really difficult. We are letting the client, or rather helping the client, to analyze its risks, and then we are providing a solution which is needed. If this is a solution of, say, averaging the risk throughout the day, or, hedging against fixing, etc., or some sort of integration, any integration that would help a client to concentrate on its business and really fully delegate the FX risk as a service to us, just like, riding a cab, more or less. Then this is something which is feasible with the client, and the client would be trusting and have confidence in the provider, and that is quite important. Anton, do you have many clients that do fixing? Well, this is not for free. Like everyone is doing that. There is a good demand for that. There is a flow that we are executing also. In terms of the more complex algos, many major desks are using algos to hedge the client operations in the markets. But one of the trends that we have recently seen is the more or less, offering smart algos and offering the algos for sale that you can really share with your client. You can charge some commission on that. But then the question is to really share, to sell the algorithm and to share that. Do you have any products of the kind, and do you have a team involved there? Indirectly, those algos which we're offering for execution, we are selling those algos because they can use our proprietary developments.
We have also prime brokerage services, and we offer them to global clients. And many of the global players use our prime brokerage services to access Russia and other markets, and they would be also happy to use some of our FX algorithms. We can sell it separately. This is one of the areas. What about you, Andrey? To be honest, we do a lot in R&D. There are a lot of attempts, there are a lot of iterations, but not all of them work. We make a lot of mistakes, and we test it on themselves, basically. And when we know that this algo order works, it minimizes market impact and gives you the best execution, then we roll out these algorithms to our customers. What else? This year we've been redesigning our Sberbank CIB terminal, and there will be some projections, like research projections for their algo orders, so that they could sort of imitate how their algo orders could work. It's like an simulator. What about you? Well, it might work going forward, but it's not the algorithm that would be an automatic, money winner for you. Again, it's a service that will grow in the future, but it's just one of the services. Manu, what about you? Any smart algos in your platform that your clients can use? Anything like this? Any services like this?
Yeah, so essentially we're developing some pretty interesting things. And back to the point that you made at the beginning about limited data sets for certain crosses, we did an experiment, and we essentially built a risk management tool, the first thing we built, and we used end-of-day data. And we chose crypto because we thought it'd be fun to do. Anyway, what we found was remarkable, that even using end-of-day data, which by the way is usually pretty useless, 70% of the time, our model accurately predicted volatility events. Didn't give a direction, it's not a trading tool, it's a risk management tool. And anyone that would like free access to this, the beta, to help us refine it, please come and see me or my colleague Michael. We'll run through how it works. And I'm putting together a paper which hopefully I will publish in the next couple of weeks, explaining our methodology, our thought process. But in terms of what we've done is we've used deep learning. So most people are familiar with machine learning. Deep learning is the latest evolution of machine learning. And the difference between machine learning and deep learning is that machine learning essentially uses structured data, i.e. labeled data. Some human somewhere has labeled that data in order for the machine to recognize it. Deep learning uses unstructured data or unlabeled data, so raw data that is given to the machine. The second difference is that machine learning is supervised. I tell the machine what good looks like. I tell the machine what bad looks like. The problem is, when you do that, the reality is I don't always know what good and bad is because the data set's so big. So the difference between this and deep learning is that deep learning, you don't say anything. I don't give it any instruction. I give it the data. It's fully unsupervised. It comes back to me with its objective inferences on that market. Now, the final difference is really the data set. So with machine learning, it's phenomenal for looking at thousands of points of data within a data set, or maybe tens of thousands. With deep learning, it's happy looking at hundreds of millions of data points within the same data set, which means the inferences it makes are exponentially better than machine learning. And that's why we believe that deep learning is the future of this entire industry. And we're looking to incorporate this into algos. So again, if you look at the risk manager algos, if you look at the alpha generation algos, also known as quant models, what is the fundamental problem with them is that when the market dynamics shift or when there's a structural change, they don't work as well as they used to. So what we've done is we've basically looked at this and said, okay, can we create an AI agent, or actually we've created several dozen AI agents, that will look at the market and give you a specific algo at a moment in time. So let's say, I don't know, hypothetically, it's 4 p.m. in New York and you're looking to do a $100 shekel. Awful time of the day to do such a trade. Well, what the AI will do is it will give you 3, 4, 6, whatever the number is of algorithms in order to execute that trade, and it will give you objective metrics for why that makes sense at that moment in time. So it justifies you doing that trade and gives you confidence that in the market conditions that exist today, this is the best way of executing it. And this obviously doesn't exist today, but this is kind of what we're building.
Okay, thank you, Manu. Хотелось бы дальше, наверное, перейти немножко больше к процессу взаимодействия между liquidity-провайдерами, маркетмейкерами. И с этой точки зрения, как вы считаете, какие есть проблемы в том, как разгружать, не знаю, там, свою позицию, как коммуницировать с другими маркетмейкерами, провайдерами ликвидности, не знаю, там, насколько хватает, может быть, кредитного лимитного пространства, чего не хватает.
So what's missing? Where are the pain points? Can I start? Credit space. Again, we are in the same boat. The more credit limits, the better. That's universal. But there are some things that vary. That Sergey said, there is a difference in the relationship between LPs and their customers, or between market makers and customers. Sometimes we often put too much focus on internalization rates, this or that. It might still mean that people internalize even more, but there is some auto-hedging in the market too. But here's a caveat. It doesn't really matter how much you receive, how much you take. It's more important on how much you unload. And you need high-tech digital solutions. Otherwise, just a supervisor, a person would not be able to hedge your position so that it would have minimum impact on the market. So you just need to be able to show to your customers in transparent manner the results of the execution, to have these customer reports, and we do have it. You need to focus on who you show your prices to, because some of the takers can take this skew and skew it on their own behalf, and they would create a market impact without any transactions. And how do you identify those skew copy-pasters, skew plagiarists? We also have a technology of how we do that. So, again, it's not how much you take, you just need to have the right balance and be able to unload and provide best execution for your customer. Andrey, do you see any issues in terms of interbanking relationship? I'll go back to where I started. Customers are much more demanding today in terms of the speed, in terms of the quality of the service. And customers now are very choosy. They want to pick the best broker. Previously, the more LPs you have, the better, the more liquidity you're going to have. And the banks thought the same way. The more ECNs and the more platforms you're going to reach out, the more coverage you're going to have. That's not true in reality, and the customers are aware of it right now, getting aware, and this is why they are filter out, they screen out the best from their liquidity pool. They choose the most trustworthy partners. The market is getting more decentralized. There are more and more different pools. Yes, we are into defragmentization. Sorry, into fragmentization, into decentralization. Yes, so what is the role of MOEX as the price discovery platform? How big is this role? How happy are you with it? What about alternatives? Do you trade in ABS or elsewhere? LMAX maybe? Or Reuters matching? Do you need this platform? And in terms of credit, is everything fine in terms of the current services that you have? Do we need more services in terms of credit intermediation, or do we need some multilateral netting for interbank transactions? For ruble, price discovery still happens in Moscow. This is important. And the markets indeed are getting decentralized. And we are seeing a clusterization. Client chooses its counterparty, and then the banks as intermediaries play a very important role. They need to integrate this liquidity for the customer. They need to put it together for the customer. The role of the Moscow exchange is very important, and that's where we see price discovery most of the time. And again, connecting to all the platforms doesn't make sense. It doesn't make sense to reach out to all LPs. Okay, let's run a survey. We do have a survey on this panel. I try to have it as separate questions, but we also discussed it with some of our colleagues before the conference. Can we run a poll right now? We know that costs are a key driver, a key component to keep profit making. And, our margins are dropping. Are you feeling the pinch? Is there a need to set up an operational service that work like in CLS? Ruble is not part of CLS. But maybe you can create an alternative on the Russian platform, on the MOX or elsewhere, and that would allow you to do mutual netting of liabilities between big players. We might think of how we can increase this range, but how is it? Is it an issue really? Credit lines, is it an issue? Evgeny? Yes, let me say a few words about whether there is an issue with liquidity, with credit limits. Well, CLS is what's missing, but I think this is the only component that's missing for the Russian ruble. I don't think we have any issues with the credit limits or liquidity, the points of liquidity or pools of liquidity. No issue. I disagree that we shouldn't reach out to all the liquidity providers. Again, it's not always easy to work with 20 LPs and not one, but you just need to have enough hands to process this flow. It's all about processing. And sometimes the best prices jump or move from one provider, from one LP to another LP. So you can't always work with just one in terms of the best price. The price discovery center statistically is still in Moscow, but for a number of years, we've been saying that sometimes it's also happening in London. And EBS is not here today. It's not present here. Well, it's presented as a CME here. So I'd like to thank them for supporting our event. They will be taking part in 3 panels. Okay, I'm sorry. I didn't know that. And over the past year, there's a new platform that's emerged, and I hope that going forward, we might reconfirm my hypothesis that LMAX, your platinum sponsor, whose CEO talked a little bit earlier, again, there's no last look on LMAX. And again, due to the rules that are there, And I hope my projections will come true. I hope it will become a new center for price discovery for the Russian ruble. So my hypothesis is that LMAX will become a third center. So far, it's just a hypothesis. There's still a lot of work outstanding, both for the platform and for us. But again, it's zero last look. Well, there are some caveats. But it's zero, it's last look free. And this is why in a year we might be saying that there are 3 platforms. And again, it's based in London. LMAX is based in London, and it could, the price discovery might get skewed towards London. And again, Moscow will still need to do a lot of work to keep its liquidity. Otherwise, we don't have any issues either with liquidity or with credit limits. Fine, time is running out and maybe just 1 minute left. So what about speed bumps? What about the order book? Do we kill it? The order book with delays and with speed bumps. We saw some growth in volume. What are the prospects in terms of the speed bump? Definitely the answer is no. There are different types of execution. The standard without the speed bump or last look, and there is one with speed bump. Yes, liquidity is a little bit down, but it doesn't mean it won't go up again. So I don't think we should get rid of it. Andrey? Now, to be honest, we don't do much at the exchange. Trading at the Moscow exchange is not really easy. The flow is too difficult for us. Anton, what about you? Well, we do some things on the exchange. Well, okay, the question is on the speed bump. We don't do a lot of trading on that. Okay, final question, very quickly. This year or maybe next year, Evgeny? What about global FX code? Come on, will you subscribe? This year, next year? We're still thinking. Andrey? The principles that are incorporated in the FX Global Code are very good. We sincerely believe that in our relationship with the customers, we need to rely on spreads and not additional hold time or other settings. Spread, this is what we should rely on. I also need to look at some kind of a symmetric last look, and maybe the market could get to this position. Anton, you're under this global umbrella, so yeah, sure. So you will not subscribe separately? No. I'd like to thank all of our panelists today.